Hello everyone, thank you for checking out this video. I'm going to try and keep it as short and concise as possible, although there's a lot of information that I have to go over. It'll definitely be worth your time. If you're watching this video right now, you came here for the truth, so let me unveil that for you. Right now, the economy is collapsing at a rapid rate. We have been in a global economic depression since 2007. Central banks all over the world have been fighting deflation since 2007. What's a depression? What's deflation? Well, a depression, it doesn't mean that people can't make money or can't get rich. It doesn't mean that everyone's poor. It just means depressed growth. So if the United States trend is 5% growth and we're only getting like 1%, which that's just a hypothetical number. I don't think we're even getting that. That's depressed growth. That's a loss of wealth. We'll never get that back. The best we can do is get back to trend. Now, deflation is natural of an economic depression. Also, the velocity at which oil just recently collapsed, that's incredibly deflationary for the entire global economy. I like to think of deflation as a 5-cent hamburger and hyperinflation as a $5,000 hamburger. To understand why central banks won't allow for deflation, you have to understand the difference between real rates and nominal rates. So if you're making 100 grand a year and you get a 10% raise, that's a 10% nominal rate, but your real rate might only be 5% if the government's taxing, let's say, half of it. Take the same scenario, you're making 100 grand a year. Instead of a raise, we get 10% deflation. Well, that's a 10% real rate increase in your wealth, in your lifestyle, and in your purchasing power, except that the government and central banks, they can't tax that raise. So deflation puts purchasing power into the hands of the people, and it takes power away from governments and central banks because they can't tax those gains. So right now, central banks are fighting deflation because they have means to create inflation, monetary easing, quantitative easing, money printing. That's all it is money printing. The Fed calls it quantitative easing. What they're doing is the Federal Reserve directly purchases U.S. Treasury bonds and they print money into existence to pay for them. What's a Treasury bond? It's just a piece of paper that's an IOU. So how are they going to pay back that IOU? They're just going to have to print more money. It never stops. They can't get out of this loop. It doesn't make sense. The whole economy is based off debt monetization. If I borrow a dollar into existence and it's the only dollar that exists and I have to pay interest on it, where does the dollar come from? They just have to keep printing it. It doesn't work. It doesn't make any sense. This notion that we could just print our way to wealth, it's absolutely ridiculous. The dollar is a fiat currency. It's not backed by gold. We all know that. It's not backed by anything. Okay. When Richard Nixon took us off the gold standard in 1971, the Federal Reserve has been in control of the world since then because they dictate monetary policy and they dictate how much the dollars in your pocket are worth. So I think it's really important that people study and understand the monetary policy of their own country's central banks. It's incredibly important, especially in today's age, especially right now. We're facing a debt crisis. There's no question about it. It's not just this country, it's global. Every country is in debt. We're the largest debtor nation. We have $20 trillion worth of sovereign debt, mostly to China. And we have nearly $200 trillion worth of unfunded liabilities. What are those? Fannie Mae, Freddie Mac, FAFSA, Social Security, Medicare, Medicaid. All these things, they can't be paid back. They can absolutely never be paid back because we're piling on the debt and we're just not getting any GDP growth out of it. So really the whole world needs to start acting like adults and stop pretending like this debt crisis doesn't exist because it's not going anywhere. And there's no paying it off. There's only two ways to get out of it. One is a default. Flat out default on our debts. That's drastic. That's not going to happen. The second option is hyperinflate our way out of the debt. Now, debt is nominal. It's not based on the value of anything. It's just a number. So, as a side note, if you have debt, maybe don't worry about it too much. If I have $1,000 worth of debt and it costs $1,000 to buy a gallon of milk, I can wipe my debt out pretty easily. And that's the strategy that central banks all around the globe are going for. There's really no other way. This has happened historically time and time again. And by the way, the value of fiat currency historically, it always goes to zero. In all of recorded history, the success rate for fiat currency is zero. So what makes anyone think the dollar is any different? It's absolutely no different. And the Fed says they've tapered. They said they stopped printing, but do you trust I don't trust the Fed, son. I'm sure they're still printing. They're just not telling us about it because they're fighting deflation like crazy right now. We're in a depression big time. Well, they stopped printing somewhere. They had to start printing somewhere else. So the European Central Bank, they just started printing up the euro in March. They are printing 1.6 trillion euros and injecting them into the market over the next 16 months. Really, all it is a currency war. Central banks all over the world are printing. A currency war is where a country devalues its currency against one of its trading partners or all of its trading partners' nations' currencies. Because an inflation rate and an exchange rate, they do the same thing to an economy. So if I devalue my dollar and it costs more paper dollars to get the same imports, then I'm actually importing inflation. So that's the point of a currency war, is to import inflation. And it's a strange world we're living in where central banks want inflation and they're not getting it. The Fed is mandated to hit 2% inflation. They're not getting it. Now, the Fed is using equilibrium models. They look at it as if deflation does this, we'll just print a little more, get some inflation to match it out. And on the surface level, it looks like it works. It looks like price stability, but there's massive deflation on one side and massive inflation on the other side, and we're right on the knife's edge. Equilibrium models don't work. You have to look at the economy in terms of dynamic modeling, complexity theory applied to capital markets, and scale to risk metrics. Scale to risk metrics is really all you need to understand to know that this collapse is inevitably happening. Scale to risk metrics just says that the larger the scale of the system, the more risk there is exponentially. Since 2008, nothing has fundamentally changed. We had a liquidity crisis. There was a $60 trillion paper asset collapse. The Fed printed $3.1 trillion. There were bailouts. There were mergers. Major financial institutions failed. There should have been a full-blown collapse. Depressions are structural. They can't be changed by monetary policy. So instead of papering it over, they really should have just let it collapse, and we could have had a restructuring. We could have been in a much better place. That's not what they did. They printed up money. We all know that. Any economist would say, "Wow, printing $3 trillion, that's massively inflationary." But it didn't happen. Why? Because we're fighting such strong deflation right now. Short-term deflation is absolutely happening right now. I mean, the U.S. dollar index is very high right now. We're importing deflation like crazy right now. And we're letting the Europeans get their inflation. So it's bad out there. It's getting bad. The derivatives market. I mean, I don't have time to go into what derivatives are, but since 2008, everything's gotten bigger, and especially the derivatives market. The global valuation of the derivatives market is $1.5 quadrillion. That's almost inconceivable. That's $1,500 trillion. Global GDP is 72.6 trillion. So stock markets, equity markets, they're supposed to represent the underlying economy. They're not supposed to be way off in their own world. That's where they are right now. Dow Jones near all-time highs, $18,000. Just the other week, I was looking at all U.S. stock markets were all exceeding all-time highs. It's astonishing to me that people even still get in the markets. You don't buy at all-time highs. You buy low and sell high. So it's absolutely crazy. Literally, all equity markets globally, they're all overvalued, they're overbought, and they're over bullish. This is the third stock market bubble and the second housing market bubble that we've had in 15 years. And why is that? That's because printing money pushes up real estate and stocks. Those are the only asset classes that respond to money printing. They're looking to get the wealth effect. That's been studied. It doesn't work. There's no trickle-down effect of these asset prices being in a hyper bubble. So just at a basic financial understanding, the stock market's due for a pullback big time, along with the housing market. These things have to collapse. There's no doubt that it's happening. So this time, the next liquidity crisis, there's not going to be a bailout. The Fed is already out leveraged. They're leveraged 77 to 1, meaning that for every $1 that they have on their balance sheets, they have $77 worth of debt. So there's really not much ammo left in that gun. They can't go and print up another couple $1 trillion. That wouldn't even work anyway because the velocity of money recently has just collapsed. Now, to understand the velocity of money, let's say I go out and I go out to dinner and I tip the waiter. And he takes those dollars, he pays the cab driver, and the cab driver takes the dollar and he buys a Redbox movie, right? Well, that dollar supported 3 transactions, so it had a velocity of 3. Well, the velocity of money has just collapsed. So they could print up another 5 trillion, but 5 trillion times 0 is still 0. So if you don't have velocity of money, you don't have an economy. And take a look at a chart of the velocity of money recently. The Fed can't do anything to increase that. The Fed has a false mandate, by the way. Their mandate is to create jobs. Fed can't create jobs. All they can do is print money. That's absolutely ridiculous. You also need to understand the federal funds rate. It's the rate that dictates interbank lending, how much you're going to get on a CD. It has a lot to do with mortgage rates. Interest rates are 0. They've been 0 for a long time. 0% interest rates do not happen in a healthy economy, especially for this long. So I actually believe the Fed for once when they say that they're data dependent. They're not going to raise rates until they see better data. When you watch the chairwoman of the Federal Reserve on the news, she's saying, oh, job numbers are close, but we're still not going to do anything. We're going to see how the numbers turn out, blah, blah, blah. They're wishy-washy, right? They're just beating around the bush. The next Federal Open Market Committee board meeting, they're not going to be able to pretend that there's any economic recovery. There's been no economic recovery. There's no good data coming out for them to pretend like they're ever going to raise rates. This forward guidance thing, it doesn't work. We're never going to see normalized interest rates. They're not going to raise rates, and they're going to go to QE4, quantitative easing round 4. They're going to print more dollars, and it's going to be another devaluation of the dollar, at which point will spark the collapse in confidence of the dollar, and that's what I'm talking about here. We're going to have a collapse of the U.S. dollar, which is the global reserve currency, and therefore a collapse of the entire international monetary system. Now, the US dollar, if you don't know, it's the global reserve currency, meaning every central bank holds US dollars as their reserves. Also, oil, for the most part, is priced in dollars. 60% of all US dollars actually reside outside the United States. So we're talking about an entire collapse. If the dollar doesn't go to 0, I'm going to predict that the value is going to decline by 80%. 70, 80, 90% decline in stock markets, massive pullbacks. I'm predicting a $150 trillion paper asset collapse. I'm going to predict, I'm thinking September, between September 13th and September 29th. That's just my prediction. It could happen tomorrow. It could happen at any time. It could be any catalyst. It doesn't really matter which snowflake it is that falls and causes the avalanche to collapse. We just know that it's set up for this. So we know when it's going to happen. We know why it's going to happen. We just don't know exactly how it's going to look when it happens. One thing's for sure, the International Monetary Fund, the IMF, they're going to print out trillions of their fiat currency called the special drawing right, or the SDR for short. They've already printed 900 billion of these SDRs. They already exist. They're already used as a trade currency between nations. Basically, the IMF prints up these SDRs and they hand them out to all the IMF member nations. It's already used as a trading currency. So, for example, Hungary, they get SDRs. They don't need them. They need Swiss francs. So they trade the SDRs to China for dollars. They can trade the dollars for francs and pay off their Swiss franc denominated debt. So there's already a secondary market for this. You don't see it happening, but it's there. So the SDR, I mean, it's a piece of shit. It's just another fiat currency. It's not backed by anything. So when there's a collapse of all the currencies, another paper currency, I mean, are people going to buy that? Are people really going to trust that? I personally don't think so. If it does work for a little while, it'll be inflationary at best. So definitely look out for that. That's what's going to happen. If you don't believe that this is going to happen, if you trust the Federal Reserve, just ignore everything I'm saying right now. And don't do any research. But if you have any concern, if you know anything about finance and economics, this should be pretty concerning. You should definitely go and do your own research. Take a look at the Baltic Dry Index. We just saw that hit an all-time low back in February. The Baltic Dry Index is an index that it tracks trade through the ports of the Baltic Dry Sea, where 90% of all trading countries use those ports. So an all-time low in that index, that to me really shows just a seizing up of the entire global economy. So this thing is happening. What can you do about it? There's something you can do to protect yourself, to protect your family, to protect your wealth, obviously, or else I wouldn't be making this video. JP Morgan himself said that gold and silver are the only things that are money. Everything else is credit. We are eventually going to go back to a gold standard. That's the only way this is going to work. Like I said about historically fiat currencies, they never last, they never work. There's no value. A fiat currency, a piece of paper currency, it doesn't have all the attributes of money. There's no inherent value in it. It's not durable. Gold and silver are the only things that actually qualify as money. They have all the characteristics and traits of money. We all know gold and silver are the most stable assets in the world. Study the gold and silver market. They're highly manipulated markets. And why that is because gold and the dollar, they trade inverse to each other. So if the price of gold goes up too high, that looks like people are losing confidence in the dollar. So they smash the price of gold down because they have ways to manipulate it. They keep gold low to keep the dollar strong, to make it keep confidence in the dollar essentially, because they trade inverse to each other. And so we are going to see an actual panic buying. Now, in the economy, usually there's only panic selling. There's no such thing as panic buying. There's going to be a panic buying of gold and silver and precious metals because really what it's going to be is a panic selling of the dollar. If we have, rampant hyperinflation, like, in Weimar, Germany, back when there was 50% day over day inflation, your dollars could buy half of what they bought the day before. When we start to see that happening with the dollar, everyone's going to be rushing into stable assets. Gold and silver. That's what I'm talking about here. That's the play. You should definitely get yourself some physical gold and silver. These markets are manipulated. I'm not talking about going out and buying the SLV or the GLD because those are manipulated by major dealer banks. What they do is called naked short selling. Essentially, they write contracts for gold and silver that don't exist. Now, the heads of these banks will tell you that precious metals are financial assets. And like T-bonds and T-bills, they trade in multiples of 100 times the underlying asset. What I just said, it may not sound that malicious, but they're selling contracts for gold and silver that doesn't exist. And people that own these contracts, they think that they have rights to the actual physical gold and silver, but it's not there, and there's mechanisms for cash settlements. So they're really only entitled to cash what the spot price on silver in the open market is at that time. So don't buy gold or silver paper contracts on, don't buy these gold and silver EFTs. I'm not talking about that. I'm not talking about mining stocks. If you don't hold it, you don't own it. Because again, it's manipulated, and it's great for people who understand it because the prices are so low historically. Gold is very cheap and silver is incredibly cheap. That's one of the most highly manipulated markets. And by the way, the total valuation of gold globally is $15 trillion. Now, a lot of people will say, there's not enough gold for us to go back to a gold standard. There is enough gold. It just has to be at the right price. So the Fed knows that gold has to go up. Everyone knows that it's going up. It's going to account for the expansion of the fiat currency supply. But what's interesting is all the above ground inventories of silver at these prices are only worth 286 billion. Now, the market cap of Apple is over $700 billion. How could one stock in one market be worth more than twice as much as all the silver on the globe? It doesn't make any sense. Obviously, it's all manipulated. The whole stock market, it's just algorithms. Most people in finance understand that. So gold is, it's a hedge. It's one of the most stable assets in the world. We know that. But it's just stored. It's not industrial. See, silver is an industrial metal. It's actually the second most used commodity in the world. It's used in everything. Computers, laptops, cell phones, cameras. It's needed to make everything. Air conditioners, cars, windows, mirrors. The thing is, though, if my cell phone breaks and I throw it away, that's a loss of silver. I'm not going to get the little pieces of silver that's in that. So we actually consume more silver than we mine. There's been a mining deficit in silver for the past 25 years straight. Above ground inventories are dwindling. There is literally a fundamental market shortage of silver right now, as well as gold too, because China has been on a stealth gold run for the past 5 years. Chinese central banks are not disclosing how much gold they have. If they did, that would cause the economy to collapse. But the CIA is tracking their Hong Kong ports, and we know their mining production and everything like that. So we have an idea of just how much gold is being acquired. The last quarter of 2014, Russia acquired $50 billion, $50 billion worth of gold before their currency, the ruble, collapsed by 50%, which is huge. I mean, currencies are collapsing already. This is happening. Just open your eyes and take a look. There is more gold movement globally right now than any other time in history. I mean, the Dutch, they just repatriated 122 tons of gold out of the New York Fed. Not People aren't even sure how they did that because the Germans, they're not getting their gold back. Nobody's really getting their gold. Central banks know that gold is money. Why else would they hold it? So there's no question that gold and silver are money. What I'm here to tell you is that there is going to be a day in 2015 where the only thing that matters is how much physical gold and silver you have, because that's going to be the only thing that is money. And when I tell people about this, they think I'll be prudent and I'll get 20% gold. Well, you just lost 80%. It's an all or nothing bet. And people are taking this bet whether they understand it or not. And if you have paper assets, if you have currencies, if you have money in the bank, if you have a 401k, if you have pensions, stocks, bonds, you're betting one way. Okay, you're trusting the Fed, you're trusting fiat currency. You've made your bet. If you have hard assets, precious metals, and trophy assets, you bet the other way. It's an all or nothing bet. I've made my bet. You have to do your research so you can feel confident in making your bet and making your choice for your future and your family. This is happening. There's no way out of the debt crisis. You do not have much time. If you don't hold it, you don't own it. Silver and gold are money. They always have been. They always will be. And honestly, guys, I think that's all. I don't know if there's much else to say. I'm probably going to put this video in a playlist of videos which will help you do some of your own research and come to some of your own conclusions. If you trust the Fed, man, just ignore all of this. If you don't trust it, if you don't trust what's going on out there, if you're looking at the markets and looking at the volatility and looking at the all-time highs, and honestly, if you know anything about finance, this should all make a lot of sense. So just go do your own research. Don't take my word for it. And yeah, that's all I got, guys. I really hope in my heart that this information helps some people. And I'm just looking to help get as much precious metals into the hands of the middle class as possible, because people are going to be wiped out when this happens. Okay? Paper assets are going to collapse. Your house is going to be worth a lot less. There's going to be a lot of panic. There's going to be a lot of denial. There's probably going to be a disruption in the food supply. There's going to be a major disruption in all sectors economically. And there's going to be social unrest. That's pretty certain. So hopefully you take this information and you run with it and it inspires you to take action. Information without execution is poverty. So that's all I got for you guys. Peace and love. Peace.